Could you talk a little bit about what current assets are and why they might be important?
Sure. Specifically, we look at working capital, which is the current assets minus the current liabilities. And from an underwriting perspective, we really look at cash, receivables, and on a contractor's balance sheet, the underbillings. Those are the primary assets that we look at when looking at working capital.
I see.
And in general, we're trying to find if a contractor has a certain backlog, we want to make sure that that working capital is at least 10%, we call it the 10% case, of that backlog.
I see, okay. So once you have a contractor and they look like they qualify for a bond, the next subject, of course, is what does it cost? What is the rate that they will be charged? How is that determined?
The rate's determined on a number of factors, but primarily is that financial strength. We want to make sure that just like when you apply for a home loan, the more assets you bring to bear, the better the rate is going to be. One of the other things that's important for a contractor to understand is that the quality of the financial statements that they provide to the underwriter is also a key determining factor. There are three different kinds of CPA prepared statements that you can get: a compilation, a review, and an audit. And anything, when you're looking at bonds over $1 million, most surety companies will require at least a review at a minimum.